Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because the global liquidity index breakout continues, and although no correlation is perfect, it's hard to ignore how well this has worked out so far. And shout out to the developer of this indicator for finally adding an offset feature. So I applied the 75-day offset we've been monitoring for months now, and you can see how big of a difference it makes in being able to visualize just how strong this lagged correlation between Bitcoin and the global liquidity index is, and how every single local bottom and local top lines up almost perfectly. But as I mentioned before, no correlation is perfect, and we can see one clear divergence here in about November to December of 2023, and I believe Bitcoin diverged during that time period because we found out that the BlackRock spot Bitcoin ETF was getting approved after most people weren't convinced it was going to happen. So I believe Bitcoin briefly diverged from global liquidity because of that event. And then once we had that reprice higher, it started going sideways like global liquidity was. And then it followed global liquidity to the upside with that 75-day offset. And this isn't something we just discovered yesterday. This indicator has been guiding us for months now. Over 4 months ago, I made a video called This Isn't Good, talking about how the global liquidity index was warning of a Bitcoin correction when Bitcoin was above 100,000 in January. And even as recent as 1 month ago, when Bitcoin was selling off and everybody was panicking over the tariff drama, I made a video called This Time Is Not Different, talking about how a Bitcoin rally was likely because of this lagged correlation with the global liquidity index. Now, I know other people use a different offset, but most of those people are only looking at global M2, which is only half of what this indicator covers. It's called the global liquidity index because it also includes the Fed's balance sheet, so it accounts for quantitative easing and quantitative tightening. It also looks at the Treasury General Account to see what the US Treasury is doing. It looks at the reverse repo program that the Fed has. It looks at European Central Bank balance sheet, People's Bank of China, Bank of Japan, and other central bank balance sheets. So this isn't the normal global liquidity or global M2 measure that you see all over the place. This one includes quite a few other liquidity measures, which is why the perfect offset for this one might be a little bit different than those others. But I've had a hard time finding an offset that works better and works more perfectly than this 75-day offset that we see here. And if this lagged correlation with the global liquidity index were to continue, we'd expect Bitcoin to rally until about early July. Now, this is only one tool in the toolbox. I'm not going to make my entire investment thesis based off of one indicator, but as of right now, with the momentum we're seeing from Bitcoin and what we've seen with this indicator so far, I am quite optimistic that we have higher to go. And that's exactly why I called Monday's free weekly report momentum, because Bitcoin is one of those assets where when it does confirm a breakout on a weekly closing basis, it usually just takes off and leaves most investors behind. And we just got a weekly close breakout as of Sunday's close above that psychological level of 100K. So right now, my base case is that the momentum will carry on until the market tells me otherwise. But as I'm sure most of you are aware, after an incredible week for all of the assets in my portfolio, especially Ethereum, my system called for some profit taking across my positions to get me back closer to my 30% cash target. I'm not one of those people who's going to try to perfectly sell the cycle top and go to 100% cash, because I have found that to be very difficult to execute both emotionally and mentally. And if anything, it usually results in an investor taking zero profits or thinking they're selling the top and selling everything way too early just to watch the market keep rallying without them. And if you're interested in learning more about my portfolio management system, I published the first 10 minutes of it, which covers why and how I created the system and my crypto story, which is something I've never shared on YouTube. You can watch that by clicking the first link in the video description if you're interested. But as of right now, I remain quite optimistic on Bitcoin with the global liquidity index breakout we are witnessing. Is this going to work every single time? Is it 100% guaranteed to skyrocket? No, but the odds are definitely in our favor. because of what we've seen in previous cycles once global liquidity makes this breakout. So until the market proves otherwise, I remain incredibly bullish on Bitcoin over the next few weeks and months. It also helps that we've seen a pretty big rejection for the US dollar index this week, especially after the multi-week bounce we have witnessed so far, and it looks like it's going to be rolling over sometime soon, and this should be a huge tailwind for Bitcoin and other risk assets, and it likely has a lot to do with the CPI print we got yesterday, where CPI remained flat at 2.8%, continuing to work its way back to the Fed's target, which is going to give the Fed less and less excuses to keep interest rates elevated and continue quantitative tightening, especially with the continued weakness we've been seeing in the labor market and the fact that we're not seeing any super huge GDP growth or anything like that. So I do believe we're going to be seeing rate cuts sometime soon. I do believe the Fed is going to end quantitative tightening sometime soon, and you can see how this has almost completely flatlined in terms of the balance sheet reduction. So it's only a matter of time before they go back to QE, in my opinion. And it seems like risk assets know this because ever since the tariff panic, Bitcoin and the S&P 500 have been rallying for about 4 to 5 weeks in a row now, as they price in all of these bullish catalysts. And speaking of bullish catalysts, we're finally seeing some progress on the trade deals with China. Now notice how a few weeks ago, when it was the best buying opportunity, everybody was talking about a trade war that would go on for decades, and this is the end of the world order as we know it. Sell everything and run for the hills. And just a little over a month later, we're seeing progress, and anybody who waited for everything to clear up before buying is now forced with a decision of whether to continue missing out or buy back into this market significantly higher than where they panic sold. We're also seeing a lot of bullish crypto specific news, like the UK becoming a safe harbor for crypto with new draft rules. And we also have the first ever crypto firm getting added to the S&P 500, which of course is Coinbase. This could have never happened under the previous administration, but for the first time, we're seeing these crypto firms getting more established, having more regulatory clarity, and not being attacked by the administration for being involved in this industry. So we'll see what happens. We are very close to being done with this chart once and for all. Once Bitcoin makes new highs, even if that's after a pullback or if we just go there in the very near future, this chart will have served its purpose, and we ended up not seeing those price regions that we labeled as unlikely. We did take advantage of the possible price region because it was a 30% correction for Bitcoin top to bottom, and in a bull market that tends to be a good buying opportunity, but it doesn't look like we're going to be able to buy at those prices once again before Bitcoin makes new highs. But it's always important to remember that although we're one rally away from new highs, the market can get overheated in terms of leverage, and there can be some quick pullbacks or consolidations along the way. I wouldn't be surprised if we saw some profit taking around the previous highs at 106K to 109K. Investors are now sitting on a ton of unrealized profit, and almost anybody who bought in the past few weeks is now sitting on pretty solid gains, especially in altcoins. And you can see that very clearly with the fear and greed index being back in the greed region. As always, the best times to buy are during fear, and the best times to try and remain calm and not take on any huge risks is during greed. But of course, our emotions want us to do the exact opposite. It is so tempting to sell during fear, and it is so tempting to FOMO all in during greed. And I try to hold myself accountable and manage my emotions by looking at this chart here. I call it the "Is it a good time to buy Bitcoin" chart, and it focuses on this cycle. It looks at Bitcoin's extension from its 200-week moving average, because we know Bitcoin likes to return to that moving average during bear markets. So usually the closer you can buy to the 200-week, the better your Bitcoin position will perform in the long term. And the further away we are from it, the more likely we are to see some corrections, some mean reversion. And if we get incredibly extended from it, the likelihood of a blow off top and bear market goes up significantly. So I'm not really interested in adding at these prices since we are so extended, but I'm hoping that we get other future buying opportunities to buy closer to the 200 week. And this isn't a Bitcoin specific thing. The S&P 500 also mean reverts to its 200 week moving average as well. You get that opportunity once every 3 to 4 years or so. And usually if you buy at those prices, it tends to work out very well for you in the long term. But every time the S&P 500 or Bitcoin are testing these major moving averages, there's always a terrifying narrative that stops investors from taking advantage and even makes them perhaps panic sell instead. Very recently, it was the tariff drama. We got quite close to the 200 week. In 2022, it was recession fears, and we tested the 200 week there. In 2020, it was the global shutdown. Everybody was terrified, and I'm sure there was a narrative in 2018. I think something happened with liquidity that the Fed had to step in with QE and save, and then there was something in 2016 as well. So there's always a narrative, there's always fear, and that's what actually brings the market low enough to give us those incredible buying opportunities. But of course, if you don't have a system or plan, buying at those levels is easier said than done. So we'll see what happens over the next few weeks. I'm still optimistic that Bitcoin has higher to go. I believe it's going to be a quick momentum rally that's going to be full of FOMO. But if we do end up consolidating again and have a slower and steadier climb, maybe it can go on longer than I currently anticipate. But the important thing is that I still expect Bitcoin to go higher this year. And until we lose that 50-week moving average, I think it's very unlikely that this cycle for Bitcoin is over, especially with what we're seeing from the supply dynamics. We're seeing a ton of Bitcoin being absorbed by these ETFs, and it seems like a good portion of these investors and institutions do have a longer time horizon and aren't trading in and out of their position. We also have Saylor and Strategy absorbing a ton of Bitcoin week after week and month after month. And a crazy fact that I found out is that Bitcoin is now deflationary due to Strategy's Bitcoin purchases alone. This is Bitcoin's supply over the past few years, but you can see once Strategy started buying aggressively and absorbing a lot of the supply, we now have significantly more Bitcoin being purchased than is being issued by the block rewards and the Bitcoin miners, which is pretty crazy in itself because we're now seeing Bitcoin miners slow down their sales, likely because they expect Bitcoin to go higher. And the OGs are very familiar with the hash ribbon buy signal. It just flashed once again. So we've seen a slowdown in sales, and that results in a hash ribbon buy signal because we saw miners capitulate and sell while price was going down. But once they stop selling, we see the buy signal on the hash ribbons. And usually that has been a very good signal for Bitcoin's price action over the next few weeks and months. Just like global liquidity, this is not a perfect indicator that will work 100% of the time forever, but as a tool in the toolbox and as a point of confluence, it's nice to see that we're seeing this signal flashing for Bitcoin. And speaking of nice to see, how could I not cover the almost 100% rally we've seen for Ethereum since the low over the past few weeks? Us Ethereum holders definitely deserve this after the pain we've experienced throughout 2024 and early 2025. And it's nice to see it slowly trying to reclaim some of those key levels and moving averages. And if we do get above 3,000 once again, I think we see Ethereum get back above 4,000 quite quickly. We now have Ethereum flipping Coca-Cola and Alibaba as it gained 42% in 5 days. And I mean, look at this incredible buff Ethereum we have here in this picture. But of course, we can't have an Ethereum rally without all the price targets coming out of the woodwork. Ethereum to 10K can't be ruled out as ETH makes sharp gains against Solana and XRP. And this Ethereum chart pattern supports moonshot rally to new price highs if confirmed. So it is nice to see that we saw Ethereum Bitcoin bottom at a similar level to the last bear market. We still have a lot of work to do to reverse this trend. The 50-week moving average has been a resistance for Ethereum Bitcoin this entire Ethereum Bitcoin bear market. And we do need to see some of these major moving averages reclaimed before getting too excited that this isn't just another temporary rally like the ones we've seen over the past few years. that resulted in nothing. And of course, we can't have an Ethereum rally without alt-season calls popping up all over the place, talking about 40% daily gains to become the new normal. It is nice to see that we've seen a great rally for Solana, now back above its range mid, back above all major moving averages, and again, a very bullish deviation below that previous range. I'm glad we got to buy the dip during all of that tariff uncertainty, but now that it's above all of these resistance levels, we likely see 200 Solana quite quickly, especially because we're seeing continued growth in the Solana DeFi activity. And we keep seeing that it's really the only other major player in town as of right now after Ethereum. I hedge my bets by holding both because they are the two leaders, but I don't know which approach is going to win in the long term. And the strength we're seeing in the Solana Bitcoin pair gives me even more optimism that Solana has higher to go. And it's nice to see that it's now up about 24% over the past year. Ethereum is almost back at break even, and Bitcoin is still crushing the competition at about 65% up over the past year or so. So we'll see what happens. A close above this range mid would confirm that it has in fact been flipped into support, and we would target range highs very, very closely. And that would then lead us to targeting range highs very shortly, and that would likely result in price discovery for Bitcoin in the short term. But as we look forward in the long term, the federal government is still running huge deficits. That trend doesn't seem to be turning around quite yet. And exponential debt growth means exponential money supply growth and currency devaluation, which is bullish for our risk assets like the S&P 500 and definitely bullish for our fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.